In just a moment, you're going to hear from the British Prime Minister. We'll take that news conference right here live on Bloomberg Television. Going into the opening bell, futures elevated up 0.75% on the S&P 500. On the Nasdaq 100, up 0.9%. We ripped off the lows of yesterday, and we had some more weight back into the S&P and the Nasdaq. There's the opening bell. Switch up the board and get to the bond market. Yesterday, yields absolutely surging at the front end and right the way through the curve. Your 10-year right now backtracking down 6 basis points to 388, 388.10, call it 388.30. Sterling very much in focus as we wait to hear from the British Prime Minister. 112.31, negative 0.8%. And to round things out for you, crude 87.32, we're down by 2 percentage points. The big banks with earnings this morning: JP Morgan, Wells Fargo, Morgan Stanley, Citi. Not my job to keep up with this. It's Sonali Basak. She joins us now. Hey, Sonali.
A lot to parse through, John, and let's start with some of the biggest topics on Wall Street. Savings rates was one of them. JP Morgan asked right off the bat whether you're going to see higher savings rates for consumers and therefore an impact on their deposit betas. Listen, they said it depends on competitive positioning plus that lag in interest rate rises. So let's see how much those actually go up for consumers. I want to also talk about the areas that Jamie Dimon sees cracks in the market. He says he doesn't necessarily see systemic risks, but he drew some areas of concern, and that includes in the dollar and emerging markets, in credit, and he talked about leverage loans as well, though he said that the market isn't yet to clear, but JP Morgan is not heavily exposed to that market. So that can explain to you a little bit why you didn't see a lot of write-downs in this quarter. You didn't see it from Morgan Stanley, you didn't see it from Citigroup, but the question is, roll forward into the fourth quarter, are they going to take those write-downs moving forward? Now, on their securities portfolio, that $1 billion worth of markdowns that you saw is JP Morgan in the market here. They bought some securities, they sold some securities, especially when it came to mortgages. Jamie Dimon has told investors that it's good for them, it's good for their capital return. He's getting questions as well, John, about what future profitability looks like.
Yep.
He said he's going to do damn good in a recession. Let me clarify that for a second. Am I allowed to say that on television?
I think you can. You just did.
Sorry, Julie. And so if we do, what he means by that is they may adjust their 17% return on tangible common equity goal a little bit, but they should be able to reach that goal in the face of all these headwinds that he has consistently outlined.
I understood the sentiment. It was well received. Sonali, we're going to do this all over again on Monday, okay?
We are.
Sonali Basak, thank you. Joining us now, Baird's David George. David, you'll have to bear with me, sir, because in a moment I have to go and hear from the Prime Minister in the UK, and when that starts, we're going to break away from this. But David, first of all, your number one takeaway from this morning, please.
Overall, the results were very good. Net interest income, really the bright spot, and really showing the true leverage of these Fed rate hikes on bank earnings, and it's having a meaningful impact on revenue trends, and we've seen that flow through this morning.
You've got a good forward look on the fourth quarter and beyond, David?
Well, on the market side, John, it's obviously a bit unknown, although I think this volatility is actually good for FICC. And good for trading so far in October. But there is very positive implications for net interest income in the fourth quarter as banks continue to get that full benefit of these Fed rate tightening.
David George, right on cue, is the Prime Minister of the UK.
My personal experience. I know what it's like to grow up somewhere that isn't feeling the benefits of growth. I saw what that meant, and I'm not prepared to accept that for our country. I want a country where people can get good jobs, new businesses can set up, and families can afford an even better life. That's why, from day one, I've been ambitious for growth. Since the 2008 financial crisis, the potential of this great country has been held back by persistently weak growth. I want to deliver a low-tax, high-wage, high-growth economy. It's what I was elected by my party to do. That mission remains. People across this country rightly want stability. That's why we acted to support businesses and households with their energy costs this winter. It's also the case that global economic conditions are worsening due to the continuation of Putin's appalling war in Ukraine. And on top of this, debt was amassed helping people through the COVID pandemic. But it is clear that parts of our mini-budget went further and faster than markets were expecting. So the way we are delivering our mission right now has to change. We need to act now to reassure the markets of our fiscal discipline. I have therefore decided to keep the increase in corporation tax that was planned by the previous government. This will raise £18 billion per year. It will act as a down payment on our full medium-term fiscal plan, which will be accompanied by a forecast from the independent OBR. We will do whatever is necessary to ensure debt is falling as a share of the economy in the medium term. We will control the size of the state to ensure that taxpayers' money is always well spent. Our public sector will become more efficient to deliver world-class services for the British people. And spending will grow less rapidly than previously planned. I met the former Chancellor earlier today. I was incredibly sorry to lose him. He is a great friend, and he shares my vision to set this country on the path to growth. Today, I have asked Jeremy Hunt to become the new Chancellor. He's one of the most experienced and widely respected government ministers and parliamentarians, and he shares my convictions and ambitions for our country. He will deliver the medium-term fiscal plan at the end of this month. He will see through the support we are providing to help families and businesses, including our energy price guarantee that's protecting people from higher energy bills this winter. And he will drive our mission to go for growth, including taking forward the supply-side reforms that our country needs. We owe it to the next generation to improve our economic performance, to deliver higher wages, new jobs and better public services, and to ease the burden of debt. I have acted decisively today because my priority is ensuring our country's economic stability. As Prime Minister, I will always act in the national interest. This is always my first consideration. I want to be honest, this is difficult, but we will get through this storm, and we will deliver the strong and sustained growth that can transform the prosperity of our country for generations to come. I'll now take questions. Can I start with Ben Riley-Smith, Telegraph?
Thank you, Prime Minister. Clearly a difficult day. Can you explain to the public why you think you should remain as Prime Minister, given you jumped to key tax cuts that led you to be elected and got rid of your Chancellor?
I'm absolutely determined to see through what I have promised, to deliver a higher growth, more prosperous United Kingdom, to see us through the storm we face. We've already delivered the energy price guarantee, making sure people aren't facing huge bills this winter. But it was right, in the face of the issues that we had, that I acted decisively to ensure that we have economic stability, because that is vitally important to people and businesses right across our country. Harry Cole.
Thank you, Prime Minister. Harry Cole from The Sun. You were the one that wanted to cut the 45p rate. You stood on a platform to win the leadership of the Conservative Party on a platform to cut corporation tax. You and the Chancellor, the ex-Chancellor, designed this budget together, in lockstep, we're told, at times in secret, the two of you. He has to go because of the fallout from it. How come you get to stay?
Well, my priority is making sure we deliver the economic stability that our country needs. That's why I had to take the difficult decisions I've taken today. The mission remains the same. We do need to raise our country's economic growth levels. We do need to deliver for people across the country. We're committed to delivering on the energy price guarantee, which people are already seeing in their bills. But ultimately, we also need to make sure that we have economic stability, and I have to act in the national interest as Prime Minister. Chris Mason, BBC.
Excuse the bluntness, Prime Minister, but given everything that has happened, what credibility do you have to continue governing?
What I've done today is made sure that we have economic stability in this country. Jeremy Hunt as Chancellor is somebody who shares my desire for a high growth, low tax economy. But we recognise, because of current market issues, we have to deliver the mission in a different way. And that's what we are absolutely committed to do, achieving that stability at what is a very difficult time globally. Robert Peston.
Prime Minister, the former Tory Chancellor, Philip Hammond, has just said that you have totally trashed the Tory party's election-winning reputation for economic competence. Will you apologise to your party?
Well, I am determined to deliver on what I set out when I campaigned to be party leader. We need to have a high growth economy, but we have to recognise that we are facing very difficult issues as a country. And it was right, in the national interest, that I made the decisions I've made today to restore that economic stability so we can deliver, first of all, helping people through this winter and next winter with their energy bills, but also making sure that our country is on the long-term footing for sustainable economic growth. Thank you very much, everybody.
Prime Minister, are you going to say sorry?
Abrupt questions, short answers. The Prime Minister, Liz Truss, Lizzie Bird and Guy Johnson back with us. Guy Johnson, your reaction, sir?
That was very short, wasn't it? She was basically asked the same question 3 times. Why should you continue in post as Prime Minister? And to be honest, she didn't look overly convincing in her answers. I think she is going to struggle. She has clearly put Jeremy Hunt in place in order maybe to provide cross-party unity. Whether or not that ultimately gets delivered, we will wait and see. But Liz Truss looks like she is rattled, would be my sense. She was looking around the room looking for people that didn't feel like a particularly slick performance, did it? She feels like she's rattled. She's just had to sack her Chancellor, one of her closest party friends within the Conservative Party. They've been very close for a very long time. They have been putting these plans together. She sacked the Chancellor. Does she ultimately need to go, I think, is the question that a lot of people are going to be asking after that performance.
You heard it asked in the news conference. Lizzie, she's got to come up with a better answer for this. Why is getting rid of the Chancellor in the national interest, but stepping down is not?
Yeah, and what I heard from what she just said was that it's exactly the same vision, but it needs to be made palatable to markets to get it through. And that is why she's had to sack the Chancellor. And there was more of an appeal to markets there, and a need to reassure markets, but I wonder whether markets will still want to be on board with the overall vision for Trussonomics, because at the heart of it, even though she's saying that she's now going to raise corporation tax, it's still Trussonomics. And it's stunning that she is going to raise corporation tax, because just reading from something she said at Prime Minister's questions only on Wednesday, I feel it would be wrong in a time when we're trying to attract investment into our country and a time of global economic slowdown to be raising taxes. So, this is really undermining to herself. We have to wonder whether markets will buy it. And even if there was a little rally when we heard that Kwarteng was going to be replaced and when there was going to be this U-turn on corporation tax, fundamentally, the economic credibility has been undermined. The BOE's had to step in. So is it too little too late?
Well, I can tell you sterling rolling over here at 111.96. We're down about 1% on that currency pair, but read whatever you want into that, because cable's been all over the place in the last week. We've had lows of 103.50 just a couple of weeks ago. We were through 112 early this morning, through 113 even. Guy, I'm pleased that Lizzie turned to policy, so let's sit there on policy. There was a reversal in there. It was the planned freeze on corporation tax, a reversal on that. They were going to try and hike that maybe a couple of months ago. Now we've got the backtrack. Guy, can you tell me if we're going to see a reversal on any other initiatives whatsoever? Because I just see one, the reversal on a planned freeze on the corporation tax. Where's the rest of it?
So if you're looking at balancing the budgets, corporation tax is one element of it. The NI cut as well, the national insurance cut, is obviously a huge other element to it. The top rate of tax was, from a fiscal point of view, largely irrelevant. It was a political blunder that they decided to get rid of that. So whether this goes far enough, we'll wait and watch. But if that's it, then this doesn't feel like a sort of wholesale reversal, as you say, of, and as what Lizzie was saying, of what was originally announced. Does this go far enough? I think the market, I think you're right, the market is going to take a little while to judge what is happening here, and I think we need to hear from Jeremy Hunt. I don't know where Jeremy is, but we'll hopefully hear from him soon. I think he was sorting out Farnham Lane rather than sorting out the entire country. So I think we're in a position here where we need to hear from Jeremy Hunt. He was against, so what is interesting is that Jeremy Hunt was against raising corporation tax. He was in the camp, when he was campaigning for the job, of saying that actually what we need to do is cut corporation tax and raise other taxes. We've ended up with almost the exact reverse of that. So it's going to be interesting to see how he kind of manages that process. So I think at this point we need to wait. We've got the sacking of the Chancellor. We've got Truss coming out with a pretty unconvincing statement. I think we need to hear on the 31st or maybe earlier from Jeremy Hunt to get a full idea. I don't think they've got a fully thought out plan, John. I think that I said this earlier on in the day.
I agree with you.
This is not a fully formed plan at this point. They are making policy on the hoof. They decided on corporation tax, but that's about it at this point. They have not got a fully thought out plan that they think will work, A, for the markets and B, for the party.
So Lizzie, let's go there. And I know this is tough to answer, but the incoming Chancellor, Jeremy Hunt, we understand he's going to deliver the medium-term fiscal plan at the end of the month, as Guy said, October 31. Are we going to hear the budget that he would have delivered for, say, Sunak, or is this just a mix of both?
I think Guy's right to characterise Jeremy Hunt as somewhere between Truss and Sunak, and that's precisely why we're expecting she's picked him, to try and reach out to those other parts of the party. In his bid for leader, he said that cutting business taxes won't stoke inflation, tackling inflation has to be the main challenge. So you can see where he sits there, but we don't know what he's going to be like as Chancellor really yet. If he's serving under Truss, he's going to have to, in a way, show that he is still delivering that vision. You heard in the press conference, the Telegraph was asking, almost disappointedly, if you're going to make reversals, how do you still get to stay as Prime Minister? So there's this big wing of the Tory party that does actually want to see, the membership that voted for Truss wants to see her carrying out her tax-cutting vision.
Got to take a step back here, Guy, as well, and talk about what's happened with markets, something that may not have happened in the QE era. We've seen markets push back. Mohamed El-Erian was on the show with us earlier this week. He wrote it in a Bloomberg opinion column. The vigilantes are back. Guy, do you think we're going to see more of this?
Absolutely. I think the whole problem here was that we were in an environment where the market was clearly concerned about inflation, and that was blindingly obvious. To put a policy into place that only exacerbated that was going to get a very sharp reaction. And I think that politicians globally are now going to be aware of this, that they need to tread carefully. We are now back in the era where if you want to be reincarnated as being all-powerful, you come back as the bond market, because clearly we are now seeing that that is where the power now lies. The UK has been the first kind of example of this. There will almost certainly be others. I imagine the Meloni government in Italy is treading much more cautiously as a result of what is happening here. Other governments will be paying attention as well. Markets can move. Before we were moving markets, bond markets are moving in very small increments. There was very low volatility, but as we've now seen, you can get huge volatility events that can erupt very, very quickly.
Makes me think, Guy, just how much fiscal space we have to deal with issues going forward from here. One question that I've pondered, and Guy, I know you've done the same thing over the last few weeks. What surprised me more rather, is not the announcement by the British government, just the way this market responded to £45 billion worth of tax cuts. Now, Guy, you said it, your words. These were febrile markets. The timing was not great. But, Guy, I do wonder, we've got a big initiative coming out of Europe to try and offset some of the energy pain. We've still got a big initiative coming out of the UK as well. And these central banks, guys, you know, are still very, very keen on tightening up policy.
They are. But And I think this is going to be the challenge for the Bank of England almost on Monday morning. How do you manage this when you have, as we've discussed, febrile markets? You've got markets that are super sensitive. Is QT going to be a policy that ultimately will have to be withdrawn in this kind of environment? Can you manage withdrawing the balance sheet, reducing the balance sheet in this kind of environment? Can you raise rates as aggressively? I think duration really matters here, John. I think it's over what period of time, and I think that's something that we've all got to try and figure out. How quickly do we want inflation to come back to target? How quickly can we get inflation back down to target 2%, circa 2%? And is the time period in which that needs to be managed longer than we originally conceived that it might be? Maybe you can do all of this, but maybe it will just take longer than you originally thought. We're seeing an awful lot of aggressive front loading at the moment. We're back to the kind of 1980s, certainly with the Fed policy that we're seeing, and others as well. Is that time frame simply too aggressive?
Yeah.
After the years and years of very, very low interest rates?
So, Guy, there's 2 points you're making here. One is, what is the appropriate time horizon to return inflation back towards target? Jean-Bart Van of BlackRock has written about that in the last few weeks. But I think the more important point here is, what is the nature of the shock, Guy? Is it a one-off shock, one winter, one war, inflation absolutely ripping, and then we go back to where we were before, perhaps in 12 months' time? Or is this a secular shift to higher rates, higher inflation? And are we seeing a permanent structural adjustment away from, say, sources of Russian energy? Now, Guy, if it is the latter, then you have to wonder how sustainable some of these policy efforts are coming from these governments right now.
I think I've heard you talking about this throughout the day. There is a large argument that says that we are going into a new paradigm, that we are not going to simply return to the low volatility environment we had before that effectively was suppressed by central banks. I think that's going to be incredibly difficult to achieve. There are lots of structural forces, I think, on the move at the moment, John. You've got deglobalization, you've got the energy story, you've got an energy story that's going to take longer to sort out maybe than a lot of people think at this point. Moving to a lower carbon energy sort of plan is going to take maybe decades. It's certainly not going to be achieved overnight. We're changing our policy with regards to China, and it's interesting to see where the UK sits in all of this. So all of this is incredibly structurally, you would have thought, inflationary. So it's going to be much more difficult for central banks to operate with that very low environment, low rate environment. I don't think we're going back there. I think the environment looks to be very different going forward. And I don't think it's just one source of change that we're seeing here at the moment. There are multiple points of change, and I think that's going to make it very difficult for markets to navigate this and to fully understand ultimately what that means for policy. I think policymakers are still trying to figure this out as well. I don't think they've got a rule book or an understanding of ultimately how they are going to respond. So again, we're going to see volatility in policy as a result.
I think we're all struggling with this one. Lizzie, I want to give you the final word. Where this leaves Governor Bailey Monday morning after this gilt market operation ends today.
Well, I think Andrew Bailey's got to be creative here. I was speaking to former BOE policymaker Martin Wheel about what he could possibly do. He suggested targeted support for pension funds that need the help. But Andrew Bailey needs to get out of this situation where he's beholden to fiscal policy and prioritising financial stability over inflation fighting. He knows that. The IMF's told him that. I think if the market volatility continues on Monday, he'll be looking for something other than the blunt tool of QE.
Hey Lizzie, fantastic work today. Lizzie Bird and Guy Johnson. Guy, I know you'll pick things up in about 7 minutes' time. Looking forward to that. Guy Johnson there and Lizzie Burden. Chancellor Kwarteng is out. Jeremy Hunt is in. Can Liz Truss hold on? From New York, this is Bloomberg. James Gorman of Morgan Stanley moments ago said the environment was difficult, but we're not stressed. I wonder if you feel the same way. Equities right now just about positive on the S&P, up a third of 1%. That's the price action. Here's your trading diary. The UMich Consumer Sentiment Survey at the top of the hour. More Fed speak, George Cook, Waller, all on the agenda. Plus President Biden discussing US inflation at 6 p.m. Eastern Time. Fed President Jim Bullard speaking from the IMF on Saturday, followed by Kashkari next week. And finally, more bank earnings to kick off Monday morning. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Friday, October 14th. Here are the top market stories that we're following for you at this hour. Bye-bye Kwarteng, hello Hunt. UK Prime Minister Liz Truss cuts Kwasi Kwarteng loose. Jeremy Hunt takes the top job. Truss says spending plans will slow. And a mixed bag for banks. JP Morgan, Morgan Stanley, Citi, Wells all deliver confusing numbers with a side of cloudy outlook for the economy. And bear hug or bull bounce. Bank of America says Thursday's historic U-turn is a bear hug as everyone tries to figure out if that rally can last. S&P down by about 0.5%. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, it has been an unbelievable morning for UK politics, ending with a complete whimper of a press conference from Liz Truss.
I'm genuinely in shock about that press conference. If you wanted to stabilize the ship, if you wanted to come out, reassert your authority and sound convincing, then that probably wasn't the way to do it. It was short, it was unconvincing, it didn't have the answers that we were looking for, didn't have any detail. I could go on. It lasted 8 minutes, I think, which I guess if we're going to make things short, which clearly we are, given Kwasi Kwarteng's tenure, then maybe that is the new approach. Let's just have a listen to what Liz Truss had to say, the British Prime Minister.
It is clear that parts of our mini-budget went further and faster than markets were expecting. So the way we are delivering our mission right now has to change. We need to act now to reassure the markets of our fiscal discipline. I have therefore decided to keep the increase in corporation tax that was planned by the previous government.
It's kind of the only thing that really came out of it, to be honest, though I think a lot of people will be forming opinions about Liz Truss and where we go from here. Lizzie Burton joining us now from Downing Street, and here in the studio we have markets editor Christine Aquino. Lizzie, let me come to you at Downing Street. Honestly, I'm still reeling from that press conference. If that was an attempt to stabilise her administration, I don't think she won many points.
Yeah, and I think markets are as impressed as you are. It was flat, it was drained, it was brief. She took questions from the press that support her, and when it turned out that she was just asked the same question again and again, how can you stay in office, she cut it short. And if you listen to it, she started off with exactly the same message as before. It's all about growth. She blamed international factors. And then she said that to get this mission through, she now understands that she needs to tip her cap to the markets. But really, she hasn't done much to show that she's going to do that, except this reversal on corporation tax. That only accounts for £13 billion a year. There's a £60 billion hole in the public finances that she needs to fill. And earlier this week, she said she's not going to cut public spending. And so really, where is it going to come? We're going to have to wait for the OBR on Halloween. Will that spook the markets? We'll have to see, but even lots of figures now, like Jim O'Neill coming out and saying that markets aren't going to be impressed by this, and really it leaves more questions than it answered. Is that really going to be it?
Yeah, I mean, listening to it was truly staggering. I mean, it felt like she was wandering through that presser looking for a friendly face at the end of the day. Christine, talking about the markets, you got the pound dropping, you have yields continuing to sort of reverse any sort of lower yields that we saw earlier. Now they're a bit high, trying to get a little bit higher here. Does this mean, Christine, that the market's just going to push around the government now?
Well, Alex, I think it seems to be that way, and whereas even just a couple of weeks ago, had they done this reversal, then maybe that would have been enough for markets, but at this point in time, after all the twists and turns in Truss's government that markets have seen, I think investors are very much focused on the fate of the Prime Minister herself. As we heard from that press conference, so many questions over whether she's going to stay, why she decided to stay, despite ousting her very close friend and ally in government, Chancellor Kwasi Kwarteng. And that really does not answer any questions, as Lizzie said, for investors. If anything, it does cloud the future prospects of the government and therefore the future prospects of the pound's direction.
Okay, let's just talk about what we got today was basically we're going back to the Boris policy on corporation tax. So that's now going to be raised. That is going to be revenue generating. We didn't get anything else. If this is, when do we get, and is this what ultimately the markets are going to be waiting for, the more fully formed Jeremy Hunt kind of economic policy, and how different will that be? She's trying to reach out across the party, clearly, and trying to stabilise the internal party situation as much as anything else. Will markets have the tolerance to wait for Jeremy Hunt until the 31st, or do you think he's ultimately going to have to do something before then? And again, is there a danger that this is basically policy making on the hoof?
Look, I mean, there's not necessarily a clear negative catalyst at this point for the pound, apart from us essentially going back to square one on this whole thing, right? So that is, I suppose, the silver lining for pound traders at this point. Now, when it comes to prospects for Jeremy Hunt, in some ways he could potentially be comforting to investors. He has a lot of experience in government. As we know, he's been through the rounds. He's seen as a steady hand. But on the other hand, he also, in a lot of ways, is kind of counter to Liz Truss. Remember, he backed Rishi Sunak in the summer leadership contest. And so there is some question over whether that would create friction with him as chancellor and with Truss as prime minister. Still, again, this is what I mean. Lots of questions over where this is going to go. Perhaps markets will have some tolerance for that, but it's not going to be a lot.
So, Lizzie, let's just cut to the chase here. Let's say Liz Truss doesn't keep this job, Lizzie. What does that look like? What does that process then look like? And who would even replace her at this point?
Well, this is part of the... if you have to put yourself in the shoes of the Tory MPs who backed Rishi Sunak, they may have to settle with the compromise that is Jeremy Hunt, because it's like turkeys voting for Christmas. If they oust Truss and replace her with a Rishi Sunak, Penny Mordaunt, someone else who ran for the leadership, then their mandate is going to be so diluted. Truss's mandate was already a diluted one when it was Boris Johnson who won the 2019 election. And so there's going to be massive pressure for whoever would replace Truss to call a snap election, and by the looks of the polls at the moment, the Tories would be absolutely annihilated by the Labour Party, wiped off the political map. So that's not something that Tories really are going to want, and that's what Philip Hammond said today. He essentially said, can Truss really expect it to be enough to change the Chancellor? But he said that he does expect her to survive.
Lizzie, the question is, though, does Jeremy Hunt, and again I come back to the question of where is Jeremy, does Jeremy Hunt have enough time between now and the 31st to create a fully formed policy? Is he going to have to actually come out earlier, maybe, than the 31st and actually start to outline what he thinks? How quickly do we need to hear from him? What is the market tolerance at this point for a relatively sort of long period of time between now? It's the 14th today. We've got to wait until the 31st. That's 2 weeks. Do we have that long? Does this government have that long? Does Jeremy Hunt have that long?
Yeah, and where is Jeremy geographically and economically? We'll have to see on Monday, when the BOE support is removed, how the markets react. But really, if he doesn't make an attempt to look like he's carrying out the Trussonomics vision, the question will become louder. What is the point of having Liz Truss at number 10 if she can't get her vision past the markets and her MPs? Is it just time for her to go, as Truss was repeatedly asked in that press conference?
Hey, Christine, last word to you on the market reaction. We're seeing a slightly steeper curve, and I'm interested to see what kind of curve indicates more credibility. Do we know that answer yet?
Well, Alex, I think a lot of it will be focused, of course, on the longer end of the curve, that 30-year sector. We know that that was a key source of consternation in markets because the initial mini budget kicked off a sell-off in that part of the curve, again kicking off this whole LDI pensions crisis over here that we're still reeling for. Markets are still recovering from that. I think a lot of focus will be on that part of the curve, perhaps a little bit of yields coming down from the higher levels that we saw a couple of weeks ago would potentially be a sign of credibility being restored in the public's perception of the government. But again, lots of steps between now and then, and a lot of questions still left unanswered.
All right, guys, thanks a lot. Really appreciate it. Jaw-dropping day, honestly, and so much more confusion and questions. We'll get you guys later on in the show as well. Lizzie Burden and Christina Aquino, thank you both very much. All right, coming up, we already have some breaking news as well. UMich sentiment index rising, but I do have to say that one-year inflation expectations also rise. For the first time since March, equities move a bit lower here. The Nasdaq 100 now off by about 1%. Joanne Shu, the head of University of Michigan Surveys of Consumers, will be joining us next. This is Bloomberg.
earnings season is here.
Markets bracing for another big earnings season.
Everyone is expecting it to be poor.
We've had big markdowns on earnings.
Bloomberg breaks the numbers first.
The bar has already been set pretty low.
The big question is, can it go lower? We're seeing some pretty bad earnings already from those who have reported.
With exclusive expert analysis.
Which aspects of the market are not sufficiently priced?
Is this a macro huge headwind?
There is some really bright light at the end of this tunnel.
When is this floor going to come? When can I start buying?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
University of Michigan consumer sentiment numbers out just moments ago. Really interesting. Index is up, but so are one-year inflation expectations. You have the S&P now up by about 0.8%. We haven't seen a rise in that one-year inflation expectation since March. Let's get to the voice behind the survey, Joanne Shu, head of University of Michigan Surveys of Consumers. She joins us from Ann Arbor, Michigan. What led to that increase in shorter-term inflation expectations, Joanne?
What consumers are noticing is this uptick in gas prices that we saw over the last few weeks, and they saw that the relief that they were seeing earlier in the summer just hasn't really been sustained with prices.
Where does that leave us with consumer sentiment, consumer confidence? What's the overall picture, Joanne?
With consumer sentiment, I would say it's pretty much stalled out for the last couple of readings. It has lifted off about 10 points above the all-time low that we saw earlier in the summer in June, but it hasn't been a sustained increase. People are still feeling the bite of inflation. Higher income people are now really starting to feel concerns about their asset values, and the improvement that we saw before has been really tentative.
So, Joanne, it is a bit confusing to figure out what's sticky and what's not, because the narrative was supposed to be, as gasoline prices came down, and I appreciate that they're rising a little bit, is that inflation expectations were to come down. Does that imply that we're looking at a more sticky scenario here?
What I think is going on for consumers is that there's a lot of uncertainty. Even with that decline in inflation expectations we saw a few weeks ago and last month, there was an enormous amount of uncertainty across the population about where inflation was going. And so I think we're in for a bumpy ride, not just for inflation, but for sentiment as well, because of all this uncertainty.
Are inflation expectations still anchored, Joanne?
Long-run inflation expectations edged up to 2.9, and it's been at besides last month, it's been between 2.9 and 3.1 since last July. So we're not really seeing any indication of moving, of a major change from that situation. What I can say is that consumers don't see any additional relief relative to how they were feeling a few months ago.
What do you think is going to change this, Joanne? Like, if gasoline prices can stay around 3, like, what's going to be the thing that reverses this direction?
I think it needs to be a sustained decrease in gas prices and prices that consumers are seeing elsewhere. Consumers aren't just responding to gas prices, and in fact, it's the lowest income consumers that saw the biggest changes, biggest increases in sentiment, and those are the people that you would think gas prices would count the most for. So gas prices are part of it, but it's not the entire story. Consumers are really considering where prices are going in all the things that they are spending. So we do need to see something sustained and not just these little wiggles. If we're seeing wiggles in prices, it's just going to, it's not going to result in any sort of sustained improvement in consumer sentiment.
Joanne, if the labour market rolls over, which isn't happening yet, what impact will that have? And are the numbers currently, to what extent are the numbers currently being supported by the relatively strong labour market?
The current numbers are absolutely being supported by the strong labor market. Consumers continue to have fairly strong expectations, not just over the labor market generally, but over their own personal incomes. By and large, consumers are expecting increases in incomes over the year ahead. And if that changes, I expect people to pull back their spending quite strongly, even above and beyond the pullback that they've done in response to high prices.
Joanne, thanks for your patience. Thanks for bearing with us as we worked our way through the British political shenanigans. This is important data, and it's having a big impact on the market. Joanne Shu, University of Michigan Surveys of Consumers Director, thank you very much indeed. Equities roll over. NASDAQ down by 1.4%. S&P now trading at 36.33. Still ahead, ECB President Christine Lagarde says an economic slowdown and the inflation that we are seeing pose a significant risk to financial stability in the euro area. Mario Centino, Bank of Portugal governor, an ECB governing council member, joining us next. This is Bloomberg. So just a few moments ago, we heard from the British Prime Minister Liz Truss. A fiscal U-turn is underway. Poses huge challenges, of course, for the Bank of England governor, and we'll hear from him, I suspect, next week. It'll be fascinating to hear and see what the bank does next. Clearly, there has been some ripple effect out of the UK into global markets, particularly the Eurozone. Mario Centeno is the Bank of Portugal governor. He is, of course, an ECB governing council member as well. Mr. Centeno, what lessons are you learning from what you're observing in the United Kingdom?
Well, thank you. Thank you for having me. The lessons that we are learning today and in the last few weeks are very important for us as policymakers, and they reinforce my idea that gradualism in policy making is very important. The worst case for all of us is if we at some point need to go back and forth in our decisions. I've been claiming for that for European policy for a long period of time already. We need to be a source of stability to our citizens. We can't be seen as going nowhere or at some point having to backtrack on our decisions.
Mario, can you fight inflation and keep financial stability?
That's our goal, to fight inflation. We need to be strong on inflation. We need to keep a steady hand, and we need to do that in a context of preserving financial stability. This is very difficult in the present conditions, of course, because we have a war, which is recessionary in essence. We are facing a huge pressure to fight inflation. We have actually all central banks in the world taking decisions simultaneously in the same direction. That magnifies the impact of our decisions. We need also to take that into account because that may increase volatility. And if volatility is at some point good for markets, too much volatility may be too much of a good thing. So we need to take into account that all central banks are taking decisions in the same direction, and that again calls for some gradualism in our approach. So I think this is a very important moment for us in central banks, and we need to be active but also attentive to these dimensions of the problem.
Mr. Centino, let's talk more about gradualism. At the moment, the market is pricing that the ECB will deliver a 75 basis point hike in October, and then the next meeting a little more than 50 basis points. Is that gradualism? Are you comfortable with that current market pricing?
Well, you know, we don't react to the markets. We have our own view on the issues. We have been collecting a lot of data on what is going on in our economies. I will not comment directly on that perspective, but I can tell you that I am in agreement with those that consider that the hiking process of interest rates is not yet over. We need to continue with that. But again, as I mentioned before, we need also to take into account the impact of our decisions and the impact of others other decisions in our framework. We will continue to hike, that's for sure. That's actually our preferred instrument at this stage. It's the interest rate adjustment. As of the size of the adjustment, I would like to refrain from comment on that precisely, because I think until the date the moment we have to take that decision, more information will be gathered, and I would like to look at all of it before making my mind on that.
So, Governor, does that mean that QT, quantitative tightening, actively selling bonds in the market, or even letting them mature, would be pushed off quite a bit? It feels a little bit like you're going to rely on rates and not quantitative tightening.
For 2022, that's certainly what is going to happen.
Next year?
Then in 2023, we have to discuss that. We have different instruments to do it. We have the TLTROs. This is 2.1 trillion euros in liquidity to the banking system. That it's also in our balance sheet. We probably need to go first through a reduction on that dimension, but that definitely is a debate for 2023 in the European Central Bank.
Sorry, just to come back to the TLTROs. You think that decisions on TLTROs will be made next year, or do you think that a change, potentially a retroactive change in the rules for the TLTROs, could be discussed earlier, potentially as soon as next meeting?
Well, we are discussing that, and we of course are looking very carefully at all the consequences of any change on that. We don't have a decision yet, but I think that will be next in our agenda, yes.
We were speaking to the Lithuanian head of the central bank there, and also governing council member, and he seemed much more aggressive on ending TLTROs. What's the unity like within the ECB? Are you guys all on the same page right now?
We discuss all pages, you know. It's a very deep analysis that we do at every decision that we take. We have a lot of information to deal with. The debate is very lively. I understand that you can see some nuances in the way we tackle issues, but at the end of the day, we are very happy that we can take decisions by consensus, and that has been the way we make progress on the issues, and it will continue to be like that. Europe must remain united. A source of stability, as I said, contrary to other jurisdictions that are very close to us. Look at the UK. You started this talk with me with a question on the UK. It's also true on some decisions on fiscal policy in the US in recent years. Yeah. On the contrary, Europe has remained quite conservative, quite responsible, I will say, in all these domains. I know that this is a sort of a novelty with respect to the euro area, but while this time around it's not the euro area that is a source of concern for the world, and that's very, very good for us.
Yeah, we'll wait and see what happens on that front. Mr. Centino, Mary Daly of the San Francisco Fed is making some comments now as well. She says she sees inflation getting to 2% in the next few years. The ECB, to quote Mr. Trichet, has a single needle in its compass, and that is inflation. How long is it going to take the ECB to get inflation back down to target?
We don't see any signs of the anchoring. When you look at medium-term indicators for inflation, we see these indicators very well anchored around 2%. Sometimes a little bit above, sometimes a little bit below, but not far from 2%. That's quite reassuring. Of course, we need to see signs of headline and core inflation going down, which is not yet the case in Europe. But we also see in the medium term inflation going back to 2%. We will produce new forecasts in December up to 2025. We will see what the numbers will tell us, but so far in the latest numbers we have, we see in 2024 inflation, very, very close to 2.3%. That's the way we expect inflation to behave. Of course, this is a little bit endogenous because it will depend on the monetary policy stance that we will continue in a very strong way fighting inflation, that's for sure. But again, with this sense of gradualism that I mentioned before.
Yeah, you brought it up. Recession? When? What does it look like?
Well, that's the key word. We don't have recession in our baseline yet. There will be for sure a deceleration of growth. There are conditions for that to occur. It's monetary policy that is kind of tightening. It's the war in Europe. It's the energy crisis. Our economies have been quite resilient, and they surprised us on the upside ever since the COVID crisis took us. We cannot forget that resilience. It has been really quite important. There's a source of concern in Europe, and for example in my own country, Portugal, which is investment. We see this decelerating a lot in recent quarters. This is something that worries me quite a bit because it is connected with low confidence. We have not recovered the levels of confidence in our economic agents since February. This is very different from what happened in COVID, in which the recovery was very, very fast. This time around, it has been much more difficult to do it. If the recession is going to be strong, no one is forecasting that, so maybe it's not that the case, and there's one good reason for that to happen, which is the labor market. Our labor markets have been amazingly strong, very, very strong in terms of employment and unemployment reduction. And in Europe, contrary to the US, for example, wages have been rather subdued. We don't have pressure from wages on inflation. So all these contexts can be a little bit reassuring for us that, well, yes, we are decelerating. The key issue will be, of course, putting an end to the war so that Europe can play again a very substantial role in the international scene.
Yes, Governor, thanks a lot. We appreciate your time today. Thank you for joining us. Mario Centeno, Bank of Portugal Governor and ECB Governing Council member. Guy, a couple things there. One that really stood out to me is the baseline is not for a recession, and I felt like I could hear the dots yet. At the same time, you have Mary Daly talking about the fact that GDP growth here needs to slow substantially. These two sentences don't feel good to me.
Yet was the word that stood out of that interview to me. He talked about the fact that this time round the Eurozone is not a source of instability. I would add, yet into that sentence, maybe. We don't know what's going to happen in Italy. You see what's happening here in the UK. I suspect the Meloni government, the to-be-formed Meloni government, is paying an awful lot of attention there. And we don't see a recession yet. It's going to be we don't know what's going to happen this winter. I hate to come back to it, Alex, but it may all come down to the weather.
No, I completely believe with you, but not only the weather, but how governments deal with the weather in terms of their fiscal balance sheets, and then how that competes or not with monetary policy. We saw just what happened in the UK.
Yep.
Did that scenario continue to happen? All right, as I mentioned, we got some pretty hawkish headlines from Mary Daly as well as Esther George. We also got that UMich number where inflation expectations for a year really rose for the first time in March, and we're trading pretty heavy now on the major equity indexes. Let's get to Abigail Doolittle, who's tracking all of these moves for us. Abigail?
Well, Alex, it's interesting because earlier today and around the time they opened, we had gains for stocks. Yesterday, of course, we had that big bullish reversal. Today, you have to wonder, do we have a bearish reversal on our hands? Let's see, because it's very jittery, skittish trading, if you will. The SPY, an ETF for the S&P 500, down about 1%. You can see the QQQs, or big tech, down more, down 1.3%. This on some of that hawkish talk, raising rates. And then you have the banks, interestingly, really outperforming, down just 0.4%. It would not be surprising to see those go green at all, given the fact that JP Morgan and both Wells Fargo are both up about 3% after earnings. Wells Fargo, of course, JP Morgan on net interest income at a record. That's really quite a positive. KWeb, though, that China tech, it is down. Now, on the last 2 weeks, we're looking at something, a possible double 2 weeks in a row gain. It's going to be interesting to see how this week goes. But, of course, last week was higher, and this week, up until just about 20 minutes ago, we had also had gains for the SPY. So, again, we could, if stocks come off the lows, we don't know that that's going to happen, but it does seem like anything is possible in this environment, Guy. We could have 2 up weeks in a row. If so, that would be the first time since August.
You love a chart, Abigail. We know you love a chart. Yesterday felt like a day for the charts. That almost looked like a perfect bounce off the 50% retracement on the Fibonacci charts.
Yeah, it is really interesting. And before taking a look at that bounce, take a look at the chart that we were looking at yesterday when we were still trying to figure out whether or not we were going to see a rally. Now, this is the downtrend. This is the most important aspect of this chart. This is the bear market with the S&P 500 down at this point, more than 25%. But you can see a strong bounce off the bottom. You can also see the RSI, an indicator of momentum relative to the bulls and the bears. It is coming off the lows, suggesting we could see a rally. It would not be surprising at all, Alex, to see the S&P 500 go back above 4,000, maybe even to 4,200.
All right, let's look at the longer term then. What are we noticing in terms of the trend?
Well, the longer term, it is interesting. I would say that this is probably a bit more bearish. So it wouldn't be interesting. It wouldn't be surprising to see stocks rally, have some kind of rebound rally into the year end, and then next year could be a bit more challenging. But this is a weekly chart, and you can see relative to the 200-week moving average, monthly chart hitting down. There's that Fibonacci that Guy was just talking about, hitting 50%, really supporting, again, that bounce back above 4,000. But again, the downtrend, the uptrend is broken. Some are talking about Mike Wilson in particular. I'm thinking about 3,000 to 3,500. This chart could make a case, Guy, for something significantly lower than that, maybe even going back toward the pandemic lows.
Ouch. Abigail, great charts. Thank you very much indeed. Abigail Doolittle, and what's happening in these markets. As we've just been discussing, we've just been hearing from San Francisco Fed President Mary Daly. She says she sees U.S. inflation getting to 2% in the next few years. Meanwhile, we've also had the UMich data. Consumers expect prices to climb to around 5% over the next year. The short term, this is kind of the short-term move that is being driven, I think, a lot by gasoline. Megan Schreiber is U.S. rate strategist at Bank of America Global Research. Megan, just talk me through your kind of thoughts on the price action over the last 24 hours. We get this hot CPI number. UMich data kind of confirms it in a way. Equities shoot to the moon, certainly yesterday. Kind of what have you taken away from the last 24 hours?
Sure, Guy. So a lot of information to kind of process.